Hello there, Maverick Traders. This is Rob Reinhold. It is July 6th, and let's go through what happened today in the market roundup. What we're going to be looking at in this session, we're going to be talking about today. We're going to go over the trading day. We're going to take a look at some of the news that happened, and we did have some big news that happened today. And of course, we're going to break everything down. We're going to take a look at the current market. We're going to see, hey, has anything changed? Do we need to update our scoring on anything? We'll take a look at the market internals, and of course, always looking at the sectors. And then last, we're always looking for setups, always looking for bullish, sideways, and bearish setups. So let's go ahead and get into it.
Have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders. You trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6- and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the Apply card in the top left, click Apply at the end screen, or click the link in the description to watch our recruiting video that explains more about Maverick and prop trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
Today was a decisively down day. Now, the first thing I want to take a look at is the news. Overnight, there was a little bit of weakness in futures. Futures were down 0.1, 0.2%. But all of a sudden, at 8:30 a.m. this morning Eastern Time, we got this ADP number that blew away the estimates. Up 500,000 jobs. Estimates were like for 230,000 jobs. This number was way stronger than the market expected. And what happened? It shot the bond yields higher. We'd already been creeping up towards that 4%, and today, boom, it just jumped right over 4%. And we talked about this last weekend in the trading room, saying, hey, the biggest risk is that bond yields get to 4%. And we said this is going to be bad for tech and anything that is not profitable. So sure enough, the market didn't like that today. As you can see, the Dow was down 1%, S&P down 0.8%, Qs down 0.8%, small caps getting no love as usual, down 1.8%. The market was decidedly bearish today, and take a look at the market internals. 81% of all stocks went lower today. So this is a broad-based sell-off all the way across the market. Let's take a look at the charts, because today's candle is actually telling us that it wasn't as bad as it could have been. So take a look at this candle. You can see that we've got a long lower shadow, and it is a green candle. What does that mean? Yes, we had a bad gap down this morning. But when the market opened, there was some selling at the open, and then it recovered all day. And by the end of the day, there was a slightly more buyers and sellers that day. Now, look, I'm not trying to paint lipstick on a pig here. This was a down day. This was an ugly day. And it's definitely telling us we could see another red candle tomorrow. But as far as down candles go, this isn't a terrible one. Candles like this, these are terrible candles. These are the ones telling you, okay, there's a lot of selling coming in. This one, nope, that is not a terrible candle. Let's take a look at the NASDAQ. NASDAQ, same thing. Now look, the NASDAQ's a little different. We did not break to a new high. We did not. So here we are up to this level. Look at today's candle. Okay. Yeah, it was a sell-off, down 0.8%. There is nothing in this chart that tells you to be worried. Now look, we do have the payrolls report tomorrow. If we have another down day tomorrow in payrolls, we will be below the 20-period moving average. And that is our first line in the sand saying, hey, we better back off our bullishness. But for right here, right now, it's not telling us yet to back off the bullishness. We might get that signal tomorrow. We'll have to wait and see. But right here, right now, these candles today are actually both green candles on the spiders and the Qs. If we take a look at the heat map, you can see there was weakness all over, but where was it the most intense? Energy. Energy was very intense, big sell-offs there. And then financials getting hit as well. And also take a look at communication services. Definitely had some problems there in communication services and consumer cyclical. Other than that, take a look at Microsoft, Apple, actually up on the day. So let's take a look at where we were. We were at a +3 on our monthly outlook, meaning that this is the strongest a market can get as far as using the 20-day moving average, 50-day moving average, and the slope of the 20/50. Everything is bullish here. We had a +1 on the week. We're still up for the week a little bit. Not too much, but still up a little bit. Okay, tomorrow's a big day. We're going to get the payrolls report, and that is either going to give us a nice green candle or a big fat red candle, and we may have to make some adjustments tomorrow going into the weekend. But let's go ahead and take a look at some potential trades you can make after tomorrow's payrolls report. Many people are unfamiliar with exactly what proprietary trading is. Prop trading is when a private firm hires traders like you to trade with their capital. Those traders are paid a percentage of the profits that they generate for the firm. Profitable traders are awarded higher and higher levels of capital to trade so they can take bigger positions and make more money. We've been in business for over 25 years and we're one of the oldest prop firms based in the USA. If you would like to look into being a trader for Maverick, look in the video description below and click on the trader position to apply. Now, I was able to find bullish trades, neutral trades, and bearish trades. But look, I actually found more bearish trades than bullish trades. And frankly, I am leaning pretty far bullish. So I'm actually getting ready tomorrow that if we do get a red candle, if we do go down below that 20-period moving average, I need to be able to take off some bulls and put on some bears. I need to say, hey, I was at a +3. I've been very bullish over the past 2 months. I just need to back that off a bit. I'm not going net short. I'm just going to back it off a little bit. So I want to have a few more bears ready than bulls just in case, because I've got a lot of bulls working right now. They're still looking good. If we get a green candle tomorrow, I'll just enjoy that and I won't put on any more bears. If we get a red candle, close below that 20, I'll trim some of the bulls and I'll take some of the bears and move my net delta down a little bit. So let's take a look at the best looking bull that I found is MasterCard. I really want to point out these last couple candles here. So we came up to this 392 where there was some resistance. And we came and we tried to poke above it. But look, every day it ran up and then it gapped down. And what happened? It ran up to its high and the next day it gapped down. And then it ran up to its high. Look at these candles. Today we got a little bit of a gap down, we got a fall, and then we got a recovery. There's a red candle, but look, it is trying to hold above this. And there's been 4 days where it has held above this resistance point at 392. That's just showing you that once it broke through that point, it wants to hold it. I'm not saying the MasterCard's going to run up to 400, 420, but what I do like is when they hold here, I love this 395. If I can do a diagonal call spread at 395 or maybe a 395 400 bull call spread if I want to be more bullish than that, I think this thing looks like it wants to go sideways or higher. It's showing some good relative strength here. As far as sideways stocks go, came across Union Pacific, a railroad stock, about as boring as you can get, and that's what we like for our sideways trades. So here's the range, basically 192 up to 207. Well, you got to pick your point here. Is it going to be closer to the 205 area? If so, you want to do in the middle of your butterfly there. If you're super bearish, you're going to say 195. I'm neither. I'm looking at that 200. So I'm looking at like a 190, 200, 210 butterfly. Very, very simple here. My target point is probably going to be right around here. That is a nice wide thing for the July monthlies. So that's giving me 2 more weeks here on this trade. On the short side, and as I said earlier, I want to get ready to put some shorts on. Now this is VF Corp, VFC. This is in the consumer discretionary. This has been one of the hottest sectors, but you can see this stock has not been hot whatsoever. Now this isn't super bearish because look, there was hardly anything that's super bearish out there, but this is about as bad of a chart as you can get at the moment. We had this little bear rally here. It failed. Okay. The one thing you can point out, Rob, the last 2 candles, people came in. People came into the stock. Yes, that is true. I am not looking to be extra heavy short on this. What I am looking to be is mildly short on this. So I could do something like an 18, 19, bear call spread. I'm going to get about 55 cents of a credit. That gives me 45 cents of risk. Very, very simple trade. I can do a diagonal put spread. Again, I just need to pick what is my lower point. Do I want it to be 18? If so, this is going to be my trade. Go out a little bit longer, buy like the 21 puts and sell the 18 puts of this, probably not tomorrow, but the next week, July 14th, against it. That's going to be basically a 7-day trade, and then you're going to reevaluate it at the end of next options expiration. So that's VF Corp. So again, sideways to sort of bearish. And then here we have Okta, another one that was running along with the NASDAQ. This is a tech company. Gap down, try to get back up above that gap point. Could not, and look at this. Remember, the market has been rallying for the last 4 to 5 days. Not this one. This one cannot catch a bid, and you can see we slipped down below this point. I like the 65 as a target here. I'm going to go the very simple trade at 65.70 bear call spread. There's going to be a lot of delta, so this will have to move lower. This is going to be a little bit more bearish than the last one I just showed you. If you want to make it a little bit less bearish, then you want to do a diagonal put spread or a targeted butterfly or something like that. But I like this one. And over the last 2 weeks, I've been taking shorts in tech because I'm overweight in tech longs, and I'm trying to reduce my exposure a little bit in tech by taking on some shorts. So that's going to be working nicely this week on the trades. So let's talk about tomorrow. Tomorrow, we're going to get the answer. Is it a bounce or is it a deeper pullback? Look, tomorrow is the jobs report. The estimates were pretty much the same for the ADP employment report. It came out at 500K jobs. The market is bracing for a hotter than expected jobs report. If it's too hot, what that means is the Fed is probably going to raise interest rates more than once or twice, and the market isn't going to like that. We're going to start to be looking at like maybe a 4.3, 4.5 on the 10-year bond. There's some stocks that don't work all that well in that environment. So if the number is too strong, I think we could see that deeper pullback. Now look, here's the silver lining of that. It means that we have a really strong economy. When you have these rate hike fears, those are fears, and yes, they take the stock markets down. But remember, what's more important than the rate hike fears is the underlying strength of the economy. If the number comes out super strong tomorrow, yes, I would expect there to be another down day like we got today. But remember, it's saying, hey, this economy is stronger than people think. That is typically very bullish for stocks. So, look, I'm not saying we're going to have a wild bull market, but if we have a pullback off of a strong number, I think you have to look at it and say, hey, this is a pullback off of a strong economic report. I want to be more of a buyer than a seller. We'll take a look at everything and reevaluate everything over the weekend in the trading room, but tomorrow will definitely give us an answer. If it is a red candle and we close on our lows, look, we have to become less bullish, and it means there's a little bit deeper pullback coming. If the market gaps down and recovers, that's a bullish sign. If the market has good news, the market likes the news, and we have a bullish candle, that's a bounce. So as you can see here, it's basically confirmation to get more bullish tomorrow or saying, hey, wait a little bit to become more bullish. That's where we are in the cycle. And at this point, we'll just have to wait and see what happens tomorrow. Well, that is a market roundup. Thanks for joining me. Goodbye, everyone.